Oh, hey guys. I just wanted to see what it was like to wear noise-canceling headsets and not be able to receive any of the information that was around me, because that's exactly what it seems like the stock market has been doing for a little while. In spite of all the warning signs to the contrary, ever since roughly March of this year, the S&P 500 has been on a little bit of a tear. And while this might look nice for our portfolios, it also sets a dangerous precedent that maybe the worst is behind us and that things will get better now. But in fact, evidence and information suggest otherwise. No doubt, this market is being driven by exuberance over the artificial intelligence craze, and probably also a premature expectation that inflation is over. But instead, we believe there's a lot of evidence to suggest that the S&P 500 gains are almost entirely from just 5 companies. Microsoft, Google, NVIDIA, or Microsoft and Alphabet, I should say. Microsoft is up 32% since the beginning of the year. Alphabet up 44%. NVIDIA an eye-popping 196 because they make the chips that AI runs on. Apple up 34%. Amazon up 67%, all just since the beginning of this year, which means that the other 495 stocks in the S&P 500 might not be doing quite so hot. Barron's recently suggested the S&P 500 might as well just be considered a large cap tech fund now, instead of a broad base representing the entire United States and American economy. Market Insider says that the S&P 500 rally has no fundamentals, meaning there's no reason it should do it, no profits, other than just people being excited about something. And not only that, but this AI craze is starting to look a lot like the dot-com bubble from way back in the 90s. And remember how that ended? Remember Pets.com, the talking sock puppet? Maybe some of you even remember JDS Uniface. And other dot-com darlings that got utterly destroyed during the dot-com meltdown. Well, certainly, there are some great companies that have come from the explosion of the internet, but history suggests that when new technologies come along, there is often a bubble that forms and bursts in the short term, and then it takes about 5 years for established companies to become profitable, survive, and grow. It's my belief that something like that will happen again with artificial intelligence. In fact, if you are interested in investing in artificial intelligence, it's probably wiser not to do it through a large cap growth stock fund or even individual stocks such as Apple and NVIDIA. Instead, maybe invest in a sector fund that specializes in artificial intelligence and cloud computing, and manage the size of the fund so it doesn't overshadow the rest of your portfolio. Anyway, I digress a little. Back in May, in our last market update video, I observed that Bank of America stated that if the S&P exceeds 4,200, that you should consider selling it. And the S&P did lift to almost 4,600 by the end of July, when Barron's suggested that this torrid stock market has got to end. But since that time, the S&P has burned off to about 4,400, but we're not out of the woods yet. Even Bank of America has now updated their prognosis to suggest that stocks may be headed for a big collapse. Our primary market indicator, VectorVest, has been showing red and yellow lights for weeks, and the market timing indicator has been falling since July. And that's what worries me, is that market updrafts that we've seen recently do not match the underlying market fundamentals. And things are still out of whack, and probably there's a more downturn to come. Some analysts are calling for very sharp downturns. John Hoffman, an asset bubble expert, recently predicted that the extreme bubble in stocks will end with tears, with the S&P 500 plunging 64%. I think that might be a little bit extreme, but David Rosenberg of Rosenberg Research suggests the Dow's latest winning streak is probably bad news for stocks, and a recession might already be underway. Black Swan author Nasib Taleb suggests that the entire structure needs to crumble and warns of a 2000-style crash could be coming. Warren Buffett and author of Rich Dad, Poor Dad are both waiting for a stock market correction and stockpiling lots of cash to take advantage of it. As I mentioned in the recent client dinner keynote presentation, we believe that we have a ways to go before we see the full impact of all the recent interest rate hikes. Remember, it takes 6 to 9 months for an interest rate hike to show up in the economy, and we still have more hikes to go, we believe. In addition, business slowdowns and real estate problems are now starting to materialize as expected. And perhaps you've seen all the big empty commercial buildings in all of our nation's big cities. Barbara Corcoran of Shark Tank says that all hell is going to break loose as leases expire and tenants do not renew. Forbes magazine suggests there is a commercial real estate comet headed our way. And New York Magazine recently published an article suggesting there are tens and hundreds or maybe thousands of worthless properties in downtown Manhattan. Earlier this month, a historic downtown Oakland tower was handed back to the bank. This may be the beginning of a trend, and I believe there's more to come. As landlords can't find tenants and can't meet their mortgage payments, they will simply give their properties back to the bank, which leads to more bank failures and more financial troubles. Meanwhile, the real estate problem is not just limited to the United States. China's largest real estate company recently suspended trading in some of its corporate bonds, one of the latest signs that an indebted property sector is weighing heavily on the world's second largest economy. China's COVID recovery, which was expected to be gangbusters, instead is turning out to be a fizzle. Meanwhile, fuel prices are back on the rise, and the United States is spending money like a drunken sailor. And the banking crisis has only just begun. There are more warning signs out there than I can keep track of. Back-to-school shopping decreases for the first time in 9 years. Jamie Dimon of Morgan Stanley predicts that the consumer will exhaust their pandemic savings by Christmas, and BlackRock is expecting the economy to flatline. Bridgewater, the largest hedge fund in the world, their second in command, says that we're not done with inflation yet. No surprise there. And about $1 trillion of high-yield debt out there, the Bank of America says is due for a day of reckoning. Consumer credit card debt has hit an all-time record of $1 trillion. And college loans deferred under the COVID suspension of payment plans are due to restart in September. But the biggest one of all, Fitch recently downgraded the U.S. credit rating because of, and I quote, massive deficits, physical deterioration, and erosion of governance. And finally, as predicted, the United States is sending the air superiority F-16 fighter jet to Ukraine soon. And if you don't think that's a dangerous escalation of war, just wait until an air superiority US-built F-16 launched from NATO countries Denmark or Netherlands shoots down a Russian-built MiG for the very first time, and then you will see what escalation really looks like. And God, I hate sounding so miserable. I really do. And I hope it's not as bad as it sounds, but I have to call it as I see it. And as I mentioned at the client dinner, we are in full-on protection mode for our clients right now. And while I do think there will be some pockets of market growth, mostly all this up and down is just noise and volatility. We have some major structural issues in the economy to resolve, and until we do so, we are on great risk of great disorder. As you may know, I'm a big fan of Mr. Ray Dalio, the founder of Bridgewater Associates, the largest hedge fund in the world. He's been doing a lot of research and writing recently, and if you're into it, I would encourage you to follow him on LinkedIn for the latest updates. His book, The Big Debt Crisis, which I know I've shown several times, describes these exact scenarios that we are currently experiencing and outlines the 6 stages of governance and civilizations from rise to fall, back to rise again, over thousands of years of history and research. He believes we are in late stage 5, where stage 6 is great disorder and conflict and possibly outright war. Earlier in July, he published his latest white paper describing the next 18 months are likely to be quite tumultuous and that the entire world is on the brink of great disorder. He describes that there are some steps that could be taken to avoid this, but also suggests that those things are unlikely to happen. He describes that leaders keep hiding and gaslighting and kicking the cans down the road until they grow too big to fail, at which point, like the Soviet Union in the 1990s, we undergo a wholesale replacement of our failed elite. Big concepts, I know. Troubling words, yes, I know. But I don't know what else to tell you. This is what my research, my metrics, my sources, and the research of others are telling me. And I would encourage each and every single one of you and each person to evaluate how much risk they are willing to take on in this environment, and what our next steps might be to protect ourselves, our families, our investments, and our assets. In the end, I believe that recession is here, but we haven't seen the worst of it yet. Likely fourth quarter and first quarter of next year will be interesting, to say the least. I believe this will last for a minimum of 12 to 18 months, possibly longer, and the risk of political strife and big governance problems are building. You know, in closing, I should say that one of the most important things I've learned in my 30 years of doing this is that I can be wrong. And for that reason, I would suggest that you research and consider what I'm sharing with you. I would also suggest you do your own research, assess what you find, and evaluate the circumstances for yourself also. And if you'd like to discuss, as always, feel free to call or write at any time. I'll be happy to chat. I'll also add, if you'd like to see my full research, just let me know and I'll be happy to send you a PDF of the whole kit and caboodle. And thanks, as always, for the confidence you have in what we do. And please, yes, let's talk soon. Thanks. See you soon.